Hello and welcome. Good afternoon. You're watching Market Fatafat on ET Now with me, Snehi Shah, and with me, as always, is Ankita Saxena. This is a show where we'll be quickly taking you through all the stocks that are buzzing on the back of their earnings or individual news flows, give you a technical lowdown on all of these stocks as well, and we'll be doing all of this in under a minute. Before we do that, let's take a look at what the markets are up to. It's been a lackluster trading session ever since we've started the day today. Nifty has been languishing away. It's the broader markets are taking a deeper cut, Ankita.
Absolutely, Snehi. In fact, the weakness that's come in from the global cues, and of course, there are no positive triggers for the market. In fact, we have broken below the psychological level for Nifty, which was 23,000, earlier in the day. In fact, we are below 22,900. In fact, we have managed just struggling to hold on to this 22,850 levels for now on the Nifty. And as you mentioned, the deeper cuts coming in as far as the broader markets are concerned. In fact, if I look at the broader markets, Nifty small cap is trading with cuts of 3.5%. Nifty mid cap is trading with cuts of 2.5%. In fact, all the gains, in the last 1 year that mid cap and small caps have, made, they have all got washed out within the period of this month. There are massive cuts coming in the broader markets as far as broader markets are concerned. If you look at the India VIX also, that is also spiked up. It's up almost 8% right now. And if you look at the sectors now, barring Nifty PSU Bank, which is very, very marginally in the green, the rest of the sectors are trading in the red. Of course, Nifty IT is really under selling pressure. Needless to say why. Of course, the DeepSeek news that has put Nasdaq and of course all the tech players alike. Nifty IT is trading with cuts of almost 3.2%. Nifty Media is also reeling under pressure of almost 4%. Nifty Bank was seeing a bit of a recovery coming in, as far as the PSU players are concerned. The Central Bank, Bank of Baroda, IOB, PSB, these are the names, UCO Bank that are really seeing recovery and are trading with, gains of, almost between 5 to 6%. So only that is the shade of green on the market right now, Snehi.
Absolutely looking rather tepid, and all of these indices are languishing away. Let's start by talking about all of the stocks that are in focus. Before we do that, let's talk about Religare. That stock has been in focus ever since we've heard about the news flow that we have another competitor now in the race to acquire some stake in Religare along with the Dabur's Burmans, and that is Digvijay Gaikwad, who's made an open offer, is what we understand. It's Digvijay Gaikwad of Danny Gaikwad Developments and Investments, Florida. We are being joined by him right now. And Mr. Gaikwad, thank you so much for taking the time out and speaking to ET Now. Give us a sense of what has motivated you to make a competing offer for Religare shareholders. Tell us what's the rationale behind making this offer.
So you can say value, the opportunity, the timing, all of the combination. When you do a business decision, you want to make a profit, you want to find a company who is valued, like that. So that's what I am. I'm a value buyer.
Right, Mr. Gaikwad, also tell us what are your expectations for the open offer proposal and what are the chance do you give for your open offer?
Definitely think I give a very reasonable offer, which is 17% more, and which is very customary in the US if you look at it on a closing day price. So when I saw it, that's what I gave it, And what are the chances? As long as the fair and equitable is there, I think I have a very great chances because the shareholders will benefit. Oh, actually, the company should be my friend because I am the one who's bringing them a value. Can you imagine? 17% more, like you are having a 17% more raise in your salary in one day. I mean, this is a great news. This is a fantastic news for everybody.
Mr. Gaikwad, also help me understand, now that you have proposed a competing open offer, what are the next steps? When are you going to be taking the next steps, and what's the way ahead for this open offer?
No, I have made actually competing offer. I have sent this first. What I did, I hired the team to do a regulatory compliance, that you do first step this, second step that, third step that. So I have done all of the above. You may have seen only my one letter, but till today, by this afternoon, which is in America, it's still Sunday. So till this afternoon, I have sent three letters. I have given them idea who's my merchant banker, who's my attorneys, everything. I mean, you may know only one letter, but we are doing one, two, three, all the series things, because we have a team who guide us. What is the compliance? What is the protocol? So we are following the protocol.
Mr. Gaikwad, also, did you consult the REL management before proposing an open offer?
No, I have made actually competing offer. I have sent us first. What I did, I hired the team to do a regulatory compliance. That you do first step this, second step that, third step that. So I have done all of the above. You may have seen only my one letter, but till today, by this afternoon, which is in America, it's still Sunday. So till this afternoon, I have sent three letters. I have given them idea who's my merchant banker, who's my attorneys, everything. I mean, you may know only one letter, but we are doing one, two, three, all the series things, because we have a team who guide us. What is the compliance? What is the protocol? So we are following the protocol.
Okay, Mr. Gaikwad, thank you so much for joining us and helping us understand the rationale behind this open offer. What's the process going to be ahead? And viewers, we'll keep you updated as and when we have more developments on this front. But let's move away from that and talk about the union budget, just a few days away now. In the head of the union budget this year, Anant Padmanabhan S., the partner at Deloitte India, says that he's expecting the finance ministry to look into increasing the R&D spends to push the concept of Atmanirbhar Bharat. Let's go across and listen into what he expects to hear from this time's union budget.
Under the Make in India initiative, while the government focused on promoting manufacturing in India, investing in R&D is also crucial to facilitate development of advanced manufacturing technologies and reduce dependency on other countries. While R&D and innovation has been an area of focus for India, we as a country trend at a very low R&D spend to GDP. India's spend on R&D is around 0.7% of its GDP, which is too low compared to other developed and peer countries. Incentivizing the R&D spend through tax or other incentives is a time-tested formula that India can replicate. The government should consider rolling out a PLI scheme for R&D as well. India has emerged as a global powerhouse supporting R&D and innovation for global enterprises. Many GCCs in India are increasingly performing R&D functions and are developing digitally innovative products. Government can consider setting up innovation hubs similar to SEZ unit and Gift City, which can enjoy preferential tax rates and duty benefits, and this will further generate job opportunities. The current safe harbor rules set a uniform margin for contract R&D services. Government should consider developing industry-specific margin matrix to factor operational dynamics across sectors like technology, AI, or aerospace. Creating an ecosystem to enable collaboration between industry and academic institutions can support the R&D sector and facilitate private funding to these institutions. This gap can be bridged by a collaboration between industry and academic institutions, which can facilitate private funding of these institutions to experiment with ideas and its implementation. Increased R&D spend coupled with incentivizing R&D can achieve the dream of Atmanirbhar Bharat.
Okay, that's the word coming in from Deloitte, the partner at Deloitte, and what he's expecting from the budget. We'll slip into a short break. While we do that, let's just address the flashes on the bottom of the screen. We have quarter 3 numbers coming in from Canara Bank. Their net interest income is down 2.9%. Maybe that is why we've seen a sharp fall coming in the stock right now. Net profit has come in at 4,100 crores, which is up 12.3% on a year-on-year basis. Operating profit has also come in at 7,837 crores, which is up a healthy 15.2% year-on-year. Provisions have seen a very healthy sequential downtick, coming in at 1982 crores compared to 2500 crores this time last quarter rather, and their asset quality also seems to have very marginally improved. Maybe that is what is missing the street estimate, because GNPA has come in at 3.3 compared to 3.7 and NNPA at 0.89 compared to 0.99 last quarter. So there has been an improvement. It's rather nominal. Net interest income has seen a fall, which is why the stock has dipped so much, although it's trying to claw its way back up. But Canara Bank down 1.5%. But on that note, we'll slip into a short break and keep it going with more stocks on the other side.
Welcome back. You're tuned into Market Fatafat. Let's get started with all the stocks that are buzzing away in trade there. And let's get on board Aditya Agarwala, who's the research head of investments in Invest for Edu. And from our research team, we're joined by Ansh. Hi, Aditya. Hi, Ansh. Good afternoon to both of you, and thank you for joining us. Aditya, I'll come to you first. You picked out Pidilite Industries for us. Aditya, the entire paint industry hasn't been doing well. In fact, Pidilite has also not done much. It has been in a corrective phase for the last 6 months. So from here on now, do you see a recovery coming in Pidilite? Why have you picked up Pidilite for us?
Hi Ankita, hi Sneha, thanks for having me on the show. I think it's time for some of these companies beaten down stocks to look at, and then they can outperform from here on, because they have been languishing for some time now, Ankita. Take a look at the whole Asian Paints, Pidilite, as you mentioned, all the FMCG stocks as well. They haven't done much for itself. Talking of Pidilite, at the moment, I think it is forming a base. It has definitely looks like for bases in place, at least a temporary base is in place. It started forming higher highs and higher lows. And current levels, the risk to reward is also in favor of going long in the stock. For a target of 3,000 to 3,100 on the downside, 2750 is a very good support area. So give or take about 120 points on the downside is a very strong support area. On the upside, stock can easily test levels of 3,100. Plus, if I plot a couple of technical indicators, that is moving average, RSI and MACD, I think both of them suggest that a temporary bottom is definitely in place, and stock will see higher levels going ahead. And given the way markets have been behaving, I think it's best to stick to the defensives, and Pidilite is one of them.
All right, moving on then, we'll move on to Godrej Consumers. That is also an earnings candidate. Let's look at how the results fared. Well, it was a rather mixed set of results coming in for GCPL. If you look at, the results on a consolidated year-on-year basis, the revenue was in line, which saw an uptick of 3% on a year-on-year basis. The net profit was a miss, which was down almost 14% on a year-on-year basis. The EBITDA was also a miss, which was down at 10%, and the EBITDA margin stood at 20% versus 23% on a year-on-year basis, which is a downtick of 291 basis points. Now, if you look at the highlights, the domestic volumes remained pretty flat. The brokerage notes that came out, Macquarie is maintaining a neutral target, and they've cut the target price to 1,125 rupees. So they've downgraded the stock. They feel that the volumes are likely to recover, but the margins are likely to remain weak for GCPL. Morgan Stanley also is maintaining an equal weight with the target price of 313 rupees. They feel that the result has been a slight bit of a miss coming in on the result front. Jefferies is maintaining, however, a buy target, but they've also cut the target price to 1,400 rupees. So all the brokerage notes have actually cut the target price for Godrej Consumers on the back of this mix set and a miss coming in on PAT and the margin front. Godrej Consumer is languishing in trade right now, currently trading with cuts of almost 1%.
Absolutely. Not only Godrej Consumers, you have big FMCG players also complaining about flattish volume. So that's a trend that we're seeing across the board. But let's move on from that, talk about fertilizers. Aditya, you picked out SRF for us. Last 6 months, it's absolutely flat. Last 1 year also not done anything commendable. What's the outlook going ahead? And do you believe that this union budget that we're seeing could provide some sort of a fillip, at least on the fundamentals? From the technicals, how's the chart looking?
Oh, I definitely think so, Sneha. And I think it's time to look at all of these stocks. It did move significantly, and then it entered into a consolidation phase. It's getting ready to break out of that consolidation phase. Pennant pattern is what I see on the graph. And if it breaks out above that, which is suppose somewhere around 2630, 2640, if we do see a trade beyond 2630, 2650, I think stock will head to levels of 2800 all the way up. On the downside, immediate supports are at 2540, plus a key indicator RSI, which I closely monitor, has moved beyond the 60 level, which is the upper end of the bear territory. So clearly looks like stock is now into a bull territory, and the consolidation that we're witnessing at the moment is an opportunity to latch onto it, initiate fresh long positions, build positions maybe for a quarter or so, and you can easily see levels of 2800 on the upside. And like of these stocks, in fact, a lot of chemical stocks could also chip in along with SRF.
Okay, thanks for that take on SRF. Let's move on. Talk about a big loser in today's trade, and that's AU Small Finance Bank. Now, remember the earnings had come during market hours on Friday. It was towards the end, so we're seeing the real impact of these earnings on the stock today. Just to brush you up, what those numbers were, they've logged a muted performance with a 5% miss on PAT at 530 crores. ROA has come in at 1.5%, mainly on lower other income and elevated provisions, owing to ongoing stress in the unsecured loans and seasonality impact on the agri and wheels book as well. Now, when it comes to guidance, the credit cost guidance was revised up. Loan growth guidance, however, was revised down on the flip side. Here's what brokerages are making of it, and that's actually one of the reasons why the stock is seeing such pressure today. Nuvama has maintained a reduced rating with a target price of 594 rupees per share. They expect the credit cost to stay elevated. Risk reward remains unfavorable, and they see better value in large private banks, is what Nuvama is saying. Nomura also has come out with a note. They've downgraded the stock to a reduce versus a neutral, cut the target price by 80 rupees from 580 earlier to 500 per share now, and they also believe that asset quality pain will continue to persist. So that's a take on AU Small Finance Bank's earnings as well as what brokerages are making of it, and that stock is lower by 6%.
All right, AU Small Finance Bank down with cuts of 6%. Let's move on to another banking name that's languishing in trade, and that's IDFC First. And it's hit its 1-month low. It's down almost 8% after the Q3 results that it posted. Take us through what does the report card look like for IDFC First?
Right, so actually the interest income was up by around 18% to 9,343 crore. Also, their net interest income was up by around 14%, but profit that has gone down by more than 50% from 716 crore directly to around 339 crore. Also, if we talk about their gross slippage, then that was up by around almost 8% from 2,031 crore to 2,190 crore. Talking about net provisions, and we are seeing that GNPA was up by around 4.9% on quarter-quarter basis, whereas NNPA was also up by 8.2%, which is a negative sign. Also, around 14% of the loan book falls under unsecured category, is also one of the negative signs here. Also, if you see on chart, then the stock has actually given a breakdown from its key horizontal support. Stock is down by more than 8% and it trades below its key DMA level, hitting that 20-month low level.
Okay, so not looking good for IDFC First Bank right now at all. Almost 8% lower is where that stock is. Aditya, coming to you, Oil India, last 1 year, while it has done decently well, roughly 50% uptick. Last 6 months itself, it's lower by almost 30%. Last 3 months also massive pressure. Tell us if things are looking positive on the charts going ahead, because right now if you take a look at the past performance, it's all looking very negative.
Oh, absolutely. And it has come down somewhere from 750 odd levels to about 400 odd levels. This is what we are looking at Oil India right now. That's a significant and deep correction when you talk about Oil India, because the rise was also somewhat like that. And at current juncture, it doesn't look like the pain is over in the stock. It has broken down from immediate support levels. The previous support was somewhere around 415, and from there it's trading lower as we speak in today's trading session. That tells me that there is further weakness in the stock. It can slide all the way down to 370, 360 odd levels. On the upside, 420 is an immediate hurdle. Till the time stock crosses 420 levels, I don't think so you will see a turnaround in the stock and a trend reversal. So if somebody is already holding on to the position, I would strongly recommend look to exit at current levels, because I see a further slide in the stock all the way down to 370 to 350. If somebody is looking to initiate fresh shots, yes, one can do so, because there is further weakness in the stock.
All right, further weakness in Oil India. In fact, time to take a short due to that weakness. But moving on to another counter, which is an earnings candidate, another banking name, Yes Bank, that reported its Q3 numbers. It's currently trading with gains of almost 2.3% in trade. Ansh, tell us what does the result say?
That's right. So in this falling market, the stock is trading with more than 2% of gains. In the morning, it was trading with a gain of around 4%. So if we talk about earnings, then they have reported interest income at 7,829 crore, which is up by around 12%. Also, their NII was up by more than 10%. Especially if we talk about profit, then that has gone up by almost 3 times from 231 crore to 612 crore, which is up by 164%. If we talk about PPOP, then that has also gone up by around 25%. However, GNP has gone up slightly by 1.9% to that 3,963 crore, but NNPA that has gone down by around 2.2%, which is a positive sign. So this is the reason why the stock is in focus today.
Okay, at least the stock that's holding up, one of the few high flyers in today's trade amid a sideways market. That stock is up more than 2%. But on that note, we'll wrap it up on this edition of Market Fatafat. Ansh and Aditya, thank you so much for joining us. Don't go anywhere. Stay tuned to ET Now.
If you like this video, then like, share and subscribe to ET Now.